so that he can join our conversation here and help us unpack Starbucks. And Andy, I'll just kick it to you. Set us up here because I think that this is a very interesting conversation. I want to get the data, and then I'm sure Kevin and I have some questions for you.
Sure. So when we look at Starbucks at LikeFolio, we're looking at what we call consumer purchase intent mentions. That is people talking about shopping at the company, buying their food, buying their drinks from Starbucks. And we're actually able to separate that and get it down to digital orders versus actual physical location going into the store type of orders. And you can see there's a real divergence there. As you can expect during a pandemic and quarantines and lockdowns, there's been a significant drop, 30% in the number of people talking about being in Starbucks stores, but the digital side of things has really crept up nicely. And it shows me a lot like Target, a lot like Walmart. A lot of these companies, especially the larger leaders of the pack, were very much prepared for they didn't know it would be COVID-19 or a virus that started this, but they were ready for a move to digital ordering. They were ready for a move to curbside pickup, and they were able to execute on that really quickly as a result. And so I think Starbucks is in the right pathways here in terms of they were set up for success, ready to deal with this as well as anyone could. And, so going forward, I think they're going to have a really nice story to tell on this earnings call about the success of their digital initiatives. And then when they can couple that with a longer term outlook, a 2021 outlook that may have some optimism because of vaccines and because of, certain states lifting lockdown orders, they could paint a really nice picture in terms of outlook because they kind of have both engines running at this point, which hasn't been the case for the past 9 or 10 months.
Andy, one of the themes that we've been talking about on these shows is scars left on the overall economy from the pandemic. And mom and pop stores, smaller business, those are going to be some of the casualties of this. So, where Starbucks is probably gaining is some attrition from mom and pop coffee shops. But here's my question to you, Andy. We're kind of assuming that, right? Who is emerging as Starbucks' biggest competitor in this new environment that we find ourselves? Because it's certainly not going to be mom and pop that don't have the capital to hold out. Who's turned out to be the biggest coffee competitor to Starbucks?
Yeah, it's definitely Dunkin'. And Dunkin' is really performing really well. They actually delivered a plus almost 1% same-store sales growth in quarter 3 while Starbucks was dropping. So they're definitely getting market share. Their Dunky is viral, and they were acquired by Inspire Brands and are doing a really good job. So I think Starbucks' biggest competitor is still Dunkin', and Dunkin' seems more competent than ever. So that's and like Evelyn mentioned, I think the other big competitor is just the idea of I'm not going out that much anymore. I've got my Keurig. I got a Keurig for Christmas, or I got the ability to make this stuff at home and start experimenting with this at home. Does that change how interested I am in driving to Starbucks to wait in a long drive-through line and spend $23? I'm not sure, but their biggest competitors, I think for sure, are Dunkin', and then just overall changes in consumer behavior.
I think that you're nailing it there too, and it was kind of almost a buried lead in that last little phrase there was driving and buying and spending $23. I think what Starbucks is really relying on now is when you go, it's for a reason. You're getting it for your whole household. You're getting the food item. It's the weekend as opposed to every day on the commute, as that tweet said. But I think that's a difficult thing to kind of handicap for investors. We almost can only kind of verify that from the report they give. My question is more from the kind of ability to be nimble and adjust to trends. And if there's a company that's been very, very nimble and agile. It's certainly been Starbucks over the years as they've gone all in on things that are working and kind of cut out things that aren't. And from your entrepreneurial background and kind of your expertise in that space, I'm sure you're looking at something like Starbucks. They've got data like this from their market trends. Can you see this going to, at least in maybe an urban area, if they can get adoption of the digital up to a certain level, that you're just walking up to a pickup window, there's one or two workers in there, there is no seating, there is nothing. This is just a quick, let me grab my coffee and I'm on my way. Far less real estate, far less employees, far less space.
Yeah, I think you're exactly right. This is one of the best companies in the world at executing against a plan. They have the capital, they have the resources to do it, they have the technology to do it now. And what that means is, they could be looking at very significant changes in consumer behavior that a lot of people think will hurt Starbucks. But like you're saying, Alex, that it could end up helping them by allowing them to deploy their product in ways that competitors can't, and with efficiencies that no one else can touch. You see that all the time with a little Starbucks opening inside of a Target store. They've shown an ability in the past decades to be where the customer is, and I think that if there's one company that can figure out how to be where the customer is when the customer is at home, it's Starbucks, and I think that they're going to get there. They're learning as they go and executing really well, and the technology is already rocking. So this is one of those companies that's called like, why bet against? I've been burned betting against Starbucks before in the past year, and it's not going to happen again anytime soon.
So that's a great place to end it then. Real quick here, Andy, how does Andy Swan, how does LikeFolio approach a name like Starbucks, where clearly, right now, it's undeniable they've been impacted, but we're talking about all the reasons to be optimistic and all the things that are happening to kind of set this company up for the future. So is this kind of broken into two maybe categories? If you're long term, maybe you're optimistic. In the short term, why bet against it? But you might take some pain with the stock at basically all time highs.
Yeah, I mean we're pretty neutral going into this earnings report. Things are lined up pretty much how our data would have expected, and so I think it's really about that outlook. And our data suggests that their outlook, their optimism on the call could be pretty high. So if I had to guess one way or another, I mean I'm not going to trade it personally, but if I had to guess one way or another, I would say Starbucks puts together a pretty good call, and investors reward them for it afterwards. But long term, there's just, like we've said before, there are better companies to bet against than Starbucks.